Welcome back to the channel. Today, we're diving into side hustles that not only boost your income, but also come with significant tax benefits. If you're looking to maximize your earnings and minimize your tax bill, this video is for you. We all know that making extra money is fantastic, but what's even better is keeping more of that hard-earned cash in your pocket legally by understanding the tax code. It's not just about how much you make, but how much you keep, and that's where these strategies really shine. Now, I get it. Taxes can seem intimidating, maybe even a little boring, but trust me on this one. Understanding how your side hustle can save you money on taxes is a game changer. It's like getting a raise without asking for one, simply by being smart about your expenses and deductions. We're going to break down 5 popular side hustles and explore the specific tax advantages each one offers. Think of this as your roadmap to not just earning more, but earning smarter in 2025. So grab a coffee, maybe a notepad, because I'm going to walk you through how freelancing, starting a small business, real estate investing, ride sharing, and even selling products online can become powerful tools for wealth building, thanks to the often overlooked tax benefits. We're talking about deductions that can significantly lower your taxable income, putting more money back where it belongs, with you. Let's get right into it and unlock these financial secrets. Alright, so let's kick things off with freelancing. This is a huge one for so many people, whether you're a writer, a graphic designer, a consultant, you name it. The beauty of freelancing, aside from the freedom, is the potential for some serious tax write-offs. One of the biggest, and often most misunderstood, is the home office deduction. If you have a dedicated space in your home that you use exclusively and regularly for your freelance business, you can deduct a portion of your rent or mortgage interest, utilities, and even home insurance. Think about that. Part of your living expenses essentially becomes a business expense. Now, the IRS has specific rules for this, so you can't just claim your entire living room if you occasionally answer emails on the couch. It needs to be a distinct area, your principal place of business, or a place where you meet clients. But if you qualify, this deduction can be substantial. Beyond the home office, think about all the equipment you use. Your computer, any specialized software you need for your work, a new printer, maybe even a portion of your internet bill. These are all potential deductions. If you buy a new laptop primarily for your freelance work, that's a business expense. If you subscribe to Adobe Creative Cloud for design projects, that's a business expense. These things add up, and they directly reduce your taxable income, meaning you pay less tax on the money you earn. It's crucial to keep meticulous records and receipts for everything. And speaking of internet, most freelancers rely heavily on it. A portion of your monthly internet bill can often be deducted proportional to its use for your business. The key here is ordinary and necessary. Are these expenses common and accepted in your line of freelance work, and do they help you generate income? If the answer is yes, then you should be looking into deducting them. Let's not forget about professional development. If you take courses, attend workshops, or subscribe to industry publications to improve your skills and stay competitive in your freelance field, these costs can also be deductible. Starting a small business can be rewarding. From a local bakery to an online consultancy, the possibilities are endless. Even a niche e-commerce store. You're not just building income, you're also gaining tax advantages. Deductible business expenses can significantly impact your bottom line. General business expenses include rent, utilities, and office supplies. Marketing and advertising costs are also deductible. The IRS allows deductions for startup costs. Consult a professional for the best tax strategy. Health insurance premiums are deductible for the self-employed. Alright, let's talk about real estate investing. Real estate investing offers unique tax advantages. Understanding tax implications is crucial for maximizing returns. Let's focus on rental properties. Depreciation is a significant tax benefit. Deduct a portion of the building's cost each year, spread over 27.5 years. This reduces taxable profit or creates a paper loss. Mortgage interest is also deductible. Interest on loans for rental properties is deductible. This can be a substantial deduction. It lowers taxable income. Property taxes are fully deductible. This offsets rental income, reducing your tax liability. Other operating expenses are also deductible. Repairs and maintenance are deductible. Property management fees are deductible. Landscaping, pest control, and insurance premiums are deductible. Keep meticulous records of every expense. Alright, let's shift gears and talk about driving for ride-sharing services like Uber or Lyft. This has become an incredibly popular side hustle, or even a full-time gig for many because of its flexibility. And just like other forms of self-employment, it comes with its own set of tax deductions that can help you keep more of your earnings. The biggest deduction for most rideshare drivers is related to their vehicle expenses. You generally have two options here: the standard mileage rate or the actual expense method. The standard mileage rate is set by the IRS each year. You simply multiply your business miles driven by this rate. Alternatively, you can use the actual expense method, tracking and deducting the actual costs you incur for the business use of your car. This includes gas, oil changes, repairs, new tires, car washes, insurance, registration fees, lease payments, and depreciation. You then calculate the percentage of time you use your car for business versus personal use and apply that percentage to your total car expenses. For many, the simplicity of the standard mileage rate is very appealing, and it often provides a substantial deduction. Finally, let's dive into the world of selling products online. Whether you're on Etsy, Amazon, eBay, Shopify, or your own website, this side hustle has exploded in popularity. And guess what? It also comes with a treasure trove of tax deductions that can help you keep more of your profits. If you're sourcing, creating, and shipping products, you're running a business, and there are many legitimate expenses you can write off. One of the biggest deductions for online sellers is the cost of goods sold, or COGS. This represents the direct costs attributable to the products you sell. It includes the purchase price of the items if you're reselling, or the cost of raw materials and supplies if you're making the products yourself. It can also include direct labor costs if you pay someone to help make your products, and even shipping costs to get the raw materials or products to you. COGS is subtracted from your gross receipts to determine your gross profit, so it's a fundamental calculation. Shipping and postage costs are another major expense category for online sellers. Every time you ship a product to a customer, the cost of that postage, the shipping labels, and any shipping insurance you purchase are all deductible business expenses. Packaging supplies also fall into this category. Boxes, bubble mailers, tape, bubble wrap, thank you cards you include in packages. All these little things add up and are necessary for getting your product safely to your customer. If you run your online selling business from home, you might be able to claim the home office deduction, just like freelancers. If you have a dedicated space where you store inventory, package orders, and manage your online store, that square footage can count. This is especially relevant if you're using a spare room exclusively for your e-commerce activities. The rules are the same, exclusive and regular use for your business. This can translate into deducting a portion of your rent, mortgage interest, and utilities. Marketing and advertising are crucial for online sellers, and these costs are deductible. This includes fees for running ads on social media platforms like Facebook or Instagram, Google Ads, promoted listings on Etsy or Amazon, or even the cost of email marketing software to connect with your customers. If you pay for graphic design for your branding or product photos, those are marketing expenses too. So there you have it. 5 fantastic side hustles that not only offer the potential to significantly boost your income, but also come packed with valuable tax benefits. From the home office deductions for freelancers and online sellers to mileage write-offs for rideshare drivers, and the powerful depreciation and expense deductions in real estate and small business. Being strategic about your side hustle can lead to substantial tax savings. Remember, the goal isn't just to make more money, but to keep more of what you earn by legally and intelligently navigating the tax code. The key takeaway from all of this is the critical importance of meticulous record keeping. Whether it's tracking every mile, saving every receipt, or carefully categorizing your expenses, good records are your best friend come tax time. They are the foundation upon which you can confidently claim all the deductions you're entitled to. Don't be afraid to invest in good accounting software or consult with a tax professional, especially as your side hustle income grows. Their advice can be invaluable and save you much more than their fees in the long run. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on maximizing your income and minimizing your taxes. See you in the next video. We've only scratched the surface today, but hopefully, this gives you a solid starting point to think about how your entrepreneurial efforts can work even harder for you. Go out there, build those income streams, and be smart about your taxes.